what it is that we're seeing as this liquidity pours into China, and as you say, they're opening up vaults all around the world. Well, it's due to the very fungible nature of gold. And to me, this is a game changer when we see that kind of stuff going on. And the very fact that you're talking about China backing the one with gold, they need to buy gold, and they are accumulating gold, and they're accumulating it at the West's expense. What are you seeing there?
China's national currency is progressively establishing itself as a major alternative in global trade, challenging the long-standing dominance of the US dollar. While the yuan has yet to surpass the dollar in terms of international transaction volume, its growth trajectory is clear and accelerating. London Paul and Andrew Maguire note that by the end of 2024, nearly 45% of China's trade is expected to be settled in yuan, more than double the proportion recorded in 2022. This increase is supported by the rapid expansion of alternative cross-border payment systems, especially the Cross-Border Interbank Payment System, CIPS, which now connects over 4,900 financial institutions globally. Recently, CIPS has even surpassed the traditional SWIFT network in transaction settlement volumes, reflecting a significant shift towards de-dollarization and a move toward more diversified, regionally focused financial infrastructures. But what truly distinguishes this trend, Maguire explains, is China's subtle yet powerful move to tie its currency to physical gold. Rather than announcing a formal gold standard, Beijing has quietly enabled full convertibility of the yuan into gold for use in international trade. This means that countries accepting yuan can either circulate it or redeem it directly for gold at designated vaults. To facilitate this process, China has opened gold storage facilities in Hong Kong and is expanding into key regions like Saudi Arabia. Maguire emphasizes that this mechanism allows partner nations, particularly in the global south, to bypass traditional dollar settlements, thereby reducing exposure to Western financial sanctions. For instance, nations such as Saudi Arabia now have the option to receive gold instantly from local vaults, rather than shipping it from distant repositories, a shift Maguire calls a game changer for international liquidity and trust. In addition to its monetary policies, China has also been aggressively securing tangible assets. Maguire has long pointed to China's accumulation of precious metals and strategic commodities, including gold, silver, copper, and aluminum, as a deliberate national policy. Unlike Western nations that often disclose reserves publicly, China maintains strict confidentiality, viewing such assets as matters of economic sovereignty. Both analysts warn that this trend has been building for years and now appears to be accelerating. As more liquidity shifts eastward, and as vault-based settlement becomes common practice, the world could be witnessing the rise of a new monetary order, one that is multipolar, gold-integrated, and increasingly less reliant on the dollar. Now, we present the clips from Andrew Maguire and London Paul's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
But let's be honest, I'm not suggesting at the moment the yuan's trading more internationally than the dollar. No, but it's increasing significantly, whilst it's very clear de-dollarization is a reality. There are still people, but increasingly less so, trying to pretend that isn't the case, but it is. And there is a lot of now data that supports that viewpoint very eloquently.
Yeah, and CIPS, I mean, I don't think most people realize the CIPS already interconnects with like 4,900 banking institutions. It's growing every day. And my understanding is that those particular CIPS settlement transactions overtook SWIFT in April.
Yeah, it could well be. I mean, it is growing hugely. And really, when you look at China alone, I think in 2024, by the end of 2024, probably about 45% of China's trade with other currencies was then settled in yuan. It doesn't mean the rest are dollars, absolutely not. And that's more than double what it was at the end of 2022. So there is this huge increase in trade. It's rather like the Saudis and the Chinese in terms of trading in oil. I mean, Saudi's interesting because they joined BRICS, but then kind of claimed they weren't in BRICS. They are, but they're keeping a low profile almost. They attend meetings, but don't actually officially admit they're in BRICS. But in terms of trading in oil with the Chinese, there's definitely a component that's now traded in Yuan. And this is why China has effectively opened up its gold trading market. It wants to open up vaults in the likes of Saudi Arabia. And this goes back to something we put out on YouTube, which was China effectively did announce the gold backing of its currency because it said in international trade that the yuan is fully convertible into gold. This is why they're opening vaults in Hong Kong. They want to do it in Saudi Arabia. Now, why would they do it in Saudi Arabia? Because if China and Saudi Arabia are trading in the yuan, then if the Saudis want to, they can either take that yuan and spend it, or they can take the yuan and say, we'd like it converted into gold. And that's equally possible. And there are no restrictions in place, which is, for me, if it's fully convertible, that's the very definition of gold backed. Now, not a lot was said about it. It's been pretty quiet. There was some attention to it in the Chinese media. I know people over there who said to me it'd be quite helpful if you put that out and explain what's going on, which we did. And it's reality. And it might not square up with what people like to believe to be true, but it is, and it is by definition a gold-backed yuan on that basis. Now, will countries avail themselves of that opportunity? Yes, they will do in the future. But China was never going to sit there and go, well, we've got a gold-backed yuan and we're going to tell the world. They'll just quietly put a mechanism in place, and global south countries can either take that yuan and spend it however they want to, or they can therefore just say, no, we'd like to exchange it for gold. And those possibilities are now in place, and this is why you will see China open vaults up all over the world to satisfy the need for countries who, rather than saying, well, I'm going to get the gold from Hong Kong and then I'm going to have to ship it back to Saudi, we have the facility in Saudi. There you go. You can just take the gold, or you can leave it vaulted there. It's up to you, whatever you want to do. And they won't have to wait 7 years like the Germans did to get, what was it, about 300 tons of gold. They can get it instantly. Well, within whatever the contractual agreement is, but it's not even weeks, and it's certainly not years.
Yeah, and I think as liquidity, and obviously as physical market liquidity flows into the West End, we have some really good connections. Our liquidity providers are very face China, face Russia, and obviously some of that stuff is not official because obviously there's sanctions against Russia. But I'm not saying our liquidities, but we are in contact with liquidity providers who are reliable. And I think what it is that we're seeing as this liquidity pours into China, and as you say, they're opening up vaults all around the world. Well, it's due to the very fungible nature of gold. So if you have gold vaulted in global vaults all over the world, and you have a transaction, it can be T+0 settled by simply moving it across from one vault or to the other side of the vault into that other nation's area. And of course, then it's globally fungible. So it doesn't have to move at some point. It doesn't actually have to move at all. So, because then say if it's in Singapore and it's against Brazil, then, why would you need to start shipping stuff around when it's a high quality, first tier, high quality liquid asset? It's a first tier asset. So it's cash. It's money. So to me, this is a game changer when we see that kind of stuff going on. And the very fact that you're talking about China backing the one with gold, they need to buy gold, and they are accumulating gold, and they're accumulating it at the West's expense. What are you seeing there?
We talked about this 2.5 years ago, and it continues to grow, and there is enormous amounts of gold heading to China, Hong Kong, Also, silver continues. We spoke about that. That carries on, not just solely China, but China is buying up, as we've said then, and has done for the last 2.5 years, as much commodities as it can get its hands on. So that includes copper, it includes aluminium, it includes everything that it would regard as strategically important. It puts them in a reserve that's a matter of national security. It never discloses how much it holds. And why should it? It has no reason to do so. But at the end of the day, one of the big pushes for China in terms of wanting to internationalize the yuan is going to be eventually the capability to price commodities in the yuan. That's clearly going to be a goal. It already is to some extent. They have got odd contracts in place, like with Brazil, where they trade commodities priced in yuan. But they want to internationalize that and grow it significantly in the future. And also by taking strategic positions, it accounts for what they perceived where there'll be shortages in the future. I mean, for me, it's very obvious there are global shortages of physical silver. That's irrefutable, even from very basic international data. So partly that's to do with the Chinese and the Indians. But if you perceive there's a market where no one else is buying, which happened during the pandemic, China took the opportunity to hoover everything up they could get their hands on. And it's also worth noting with regards to the internationalization of the yuan that more and more investors are actually taking money out of places like the United States.
The long-standing dominance of the US dollar in global trade and finance is increasingly being challenged as key emerging economies, particularly within the BRICS alliance, pursue mechanisms to reduce their dependence on the greenback. A combination of geopolitical tensions, economic sanctions, and a desire for greater financial sovereignty drives this shift. Andrew Maguire highlights that these countries are moving beyond mere rhetoric, actively implementing systems to conduct trade settlements in their local currencies. These initiatives include the tokenization and digitization of substantial real-world assets, such as energy resources, agricultural commodities, and metals, creating a robust foundation for a new financial infrastructure operating outside of traditional Western-controlled networks like SWIFT. A significant aspect of this transition is the increasing integration of gold as a backing asset in cross-border transactions. China's policy to make its currency fully convertible into gold, combined with the establishment of global gold vaults, particularly in strategic regions such as the Middle East, enables trading partners to either hold yuan or convert it into physical gold seamlessly. According to Maguire, this arrangement represents a critical step toward a commodity-backed trade settlement system, enhancing both security and liquidity while reducing counterparty risk. This evolving framework not only facilitates stronger economic ties among BRICS nations, but also poses a structural challenge to the dollar's global supremacy, signaling a move toward a more multipolar and diversified international monetary order.
With regards to BRICS, therefore, local currencies is the way forward, but also there's a lot of discussions going on where you will not hear or see any discussion or development. They want to keep things quiet, whilst in the process of developing cross-border trade, being able to look at, as you rightly point out, trading commodities outside the dollar. That's another extremely important discussion point. And basically finding ways to optimally trade with each other and to be able to take advantage of this enormous resource base they have, because it's not just, of course, the Russians who have enormous resources that are untapped. And, therefore, on that basis, it makes sense to just go about their business, keep quiet about it, don't overplay it, don't overblow it, don't antagonize the Americans too much. You might do something harebrained as far as they're concerned. But this development with the new development bank in terms of trying to massively fund investment, infrastructure projects, etc., with these loan guarantees is a huge step forward. And it's those kind of things that will eventually allow BRICS countries, because more and more want to join. There's probably another 20 or 30 that would like to join, but you have to be a bit careful with these kind of institutions that they don't grow too quickly, because then you've got to start catering for the needs of other countries who arguably, you might say, are not really in a position at this point in time to join. They can be observer countries, but not full members. And unlike the European Union that railroads countries into the European Union or into the euro who should never have joined, that's not how this process will work with BRICS. And it's also worth noting it's not really an alliance as the West perceives an alliance to be. So this is why you can have countries like India who disagree with something, and that's not a problem. No one has a problem with any country disagreeing. Not every country has to sign up to all the initiatives. And for those people who say, well, India is going to get kicked out by the Chinese and the Russians, no, that's not the intention. And in fact, 2026, India has the presidency of BRICS. They've already shared the kind of things they'd like to push with regards to BRICS with the Russians and the Chinese, who are very happy with these developments. And, after all, Modi did turn up in person. Putin didn't because of the risk of being arrested because of the ICC ruling. And Xi didn't turn up because he had something personal to deal with, therefore sent an able deputy. And people, again, tried to read far too much into this. But I think when people try to find spurious reasons to suggest BRICS is dead and buried or never got off the ground, they say it out of fear, not out of anything tangible. But there are probably, as well worth noting, maybe 20 or 30 committees. They're all working on different projects in BRICS. They don't report these things, but they just get on with whatever they're looking at. And the important thing for BRICS as this loose alliance, and I will say that even though it sounds like I've just contradicted myself, is they have to get things right first time. Because if they fail, then the world will look at them and go, well, we thought you were the alternative, and you've proved yourself not to be the alternative. And you don't want to turn away a whole bunch of nations who just want to join or have recently joined. So that's the old adage, get things right first time. Otherwise, therefore you're going to have serious problems. So I wouldn't be too worried about what a BRICS currency will look like. I would suspect at some point in the future that will surface. But for now, it's not a priority. They've got far more important things to get on with. And if as a collective you build the economies of these countries up, where they're able to fully exploit the resources they've got or access to resources to put the infrastructure in place, whether that's roads, railways, bridges, ports, whether it also, of course, relates to technological or the sharing of technology, that's something else that's very much prevalent in the BRICS thought processes now. But of course, like anything, you have to standardize these things and make sure everything is written is satisfied by international law, something perhaps in the West we ought to pay a bit more attention to as well. So the regulatory side of things, whilst has to be at a minimum, has to be in place that satisfies the needs of all the participants and isn't skewed to favour, say, for argument's sake, the Russians and the Chinese. So I think overall that kind of sums up the BRICS summit in Rio. And just wait for the odd announcement. You can glean some stuff from the communiques they write, but not an awful lot. But the essence basically is we're going to produce cross-border trade that will be able to be utilised by all participants. And for now, though, just stick with local currencies, avoid using the dollar, and do everything you can to avoid, obviously, in the future, we don't want to use SWIFT. We want alternatives. The Chinese, of course, already have CIPS as one example. And just a small point with regards to that. People don't understand just how huge that is already, because in 2024, in cross-border transactions, they processed 175 billion yuan, which is more or less $24.5 trillion equivalent. That was up 43% from 2023. And by all accounts, the figure is going to be substantially higher in 2025. So again, this is China trading with a whole bunch of nations who will be utilizing the yuan, not utilizing the dollar. And if we look at all the SWIFT data, it doesn't take into account CIPS. And in any way, shape or form, when you start to stack up the amount of trade that's going through CIPS and other interbank payment systems that exist that the world doesn't even know exists in countries who they're utilizing them, but not telling the world they're utilizing because they don't want to, at this point, upset the Americans. Then you start to realize that the SWIFT figures don't really mean an awful lot.
If China maintains its current trajectory, the global financial system could experience a significant shift away from US dollar dominance toward a more multipolar structure centered around its currency, which is increasingly used in international trade and supported by expanding alternative payment networks. By linking its currency to physical gold and establishing regional vaults that allow trade partners to convert currency into tangible assets instantly, China is creating a more stable and trusted framework for cross-border transactions. This move not only enhances liquidity and reduces reliance on traditional dollar settlements, but also empowers countries, particularly in the global south, to circumvent Western financial controls and sanctions. As a result, global reserves and investments may increasingly flow into precious metals and strategic commodities, potentially reshaping the international monetary order into one less dependent on the dollar and more balanced across multiple currencies and asset-backed mechanisms. How do you think the rise of alternative currencies and gold-backed trade will impact the future of the US dollar's global dominance? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.